Shares of Apple are higher this morning after a pretty unbelievable earnings report from the company last night. Joining us right now to dig through it is Will Power. He's senior analyst at Robert W. Baird. Also, Wamsi Mohan, who is senior analyst at B of A Securities. And gentlemen, I have to ask you this. I'm a little confused reading through the notes on this because this is the type of stuff that would make me crazy if I was an investor reading through it. I think you both have price targets of $160 now. But Wamsi, you're looking at reiterating your neutral rating on this. And Will, you're looking at this as an outperform. So how do you get to those two positions? And Wamsi, I'll start with you. There was a lot of good news in this. I see you moved up to the price target, but you're keeping your neutral rating. How does that kind of work out?
Yeah, Becky, look, I mean, unquestionably, this was a stellar quarter. It was way above anyone's expectations, even on the buy side. Even the highest expectations that I was talking to institutional investors was about 85 billion, and they came in at about 89 billion. So no blemish on the quarter. But that said, last quarter, the December quarter, was an equally stellar quarter. It was an entire blowout, and the stock underperformed the broader market by 15 points. So I think we have to decouple what the fundamentals are doing right now versus what we expect the fundamentals will do in the future. And what we're concerned about really is the fact that when you put up these sort of numbers, which is great for now, you really are going to comp those next year. As we look at earnings for fiscal 22, fiscal 23, we're probably down to flat in those 2 years. And it's very hard to justify a higher multiple on that. So although we took our price target up, we took our multiple down. And there's other risks that keep us balanced because, look, we've got the antitrust risk that runs both through App Store as well as the Google licensing payments, which is a very high margin business. You got the potential headwind, and we don't know this yet for a fact, about taxes. And then you have these really tough comps. I mean, the growth that we really saw in the quarter, $51 billion, 27 billion of that was the iPhone. So when you put that all together, you have to acknowledge that it's a fantastic quarter, and the numbers that they're posting are really unbelievable, as you said, Becky. But at the same time, you know, what does this mean for the future, next year's growth and the following year's growth? And that's where we see the challenges.
Well, you've got an outperform rating, so make your case for why this is such a great buy.
Well, Becky, good morning. Thanks for having me. Look, we've taken a longer-term view on this. This is a name we've liked for some time. We think there's still nice growth avenues ahead of it. And I think at the end of the day, what you're going to see, like we just saw this past quarter, is it's going to continue to grow into the valuation. So this wasn't just an iPhone quarter. Sure, it was a superlative among superlatives on the print. But you've got iPad and Mac that are enjoying a resurgence. Of course, with the new M1 chips, you've got additional growth opportunities there. And I think part of the bet here, Becky, over time is that this is a company that can indeed continue to innovate and drive new product categories. Look no further than the recent announcements around AirTag, around the updated Apple TV as they move into the living room in a bigger way. And shoot, longer term, you look at opportunities around healthcare, autonomous vehicles, augmented reality, and that's what I think investors are playing for, right? Are the options on some of the new categories to help augment the strong growth they're already generating. So we continue to like the setup and the opportunity to continue to grow into the valuation here.
Wamsi, is the key to your neutral rating that you just think there are other places you would rather put your money? What stocks do you like better?
Yeah, I think that if you've seen what has happened within value tech, we just mentioned Apple underperformed the broader market by 15 percentage points. But at the same time, I have other companies in my coverage universe that have done exceedingly well. If you look at, for instance, Seagate Technologies, the chart is up and to the right in the same time frame, massive outperformer. You look at HPE, you look at NetApp. So there is a case to be made that there are laggards that have really not benefited from the pandemic, which are now going to start to benefit from a reopening. At the same time, it's not that we dislike the fundamentals of Apple. We like the fundamentals. We just think that the risk reward is much more balanced over here, where we see equal amounts of upside and downside. And it's very hard to recommend a stock when you feel that there could be potentially a lot further upside in a cyclical recovery for the economy when enterprise spending is going to open up, versus the comps that you're going to face on the iPad, on the Mac, on the services business, which hugely benefited from a time when people were sitting at home and on their devices for an entire 6 or 9 months of last year. And you're going to start to comp that over here shortly.
Shepard Smith here. Thanks for watching CNBC on YouTube.